All right, wanted to check out the S&P here on the weekly before we get started on Monday. We have price testing down into the put wall here at about 42.25 or so. It's 4200 SPX, and then it's decaying at ES rate. We have overnight low at 42.15 in the quarter, and then we finally have our first level of retracement support here at 42.02. That is the tertiary 38.2. We are basically coming back to retest this entire breakout from back in May of earlier this year. We sat here for quite some time, and we established quite a large node of volume here from 41.25 ES all the way up into about 41.70 or so. You see that marked here in the white box as a potential line of support, area of support. We also have a downtrending channel into that range that opens into box by 13 November. Not to say that we cannot wash out this bottom rail, but for now, as we trend, that is the set of the quickest cross. And the latest cross is all the way out of here into 17 June of 24. So the channel establishes the timeline that we may reach into a horizontal support structure, and this is the horizontal support structure that we wish to reach. All of this volume here should act as demand, sans some massive event as we reach it, not such as the current exogenous events that are causing more of a grind down than a fall down. So this will be our major support if we do reach it. Ahead of that, we do have 42.02 today, as well as this 42.20 area to hold supportive at the put wall. We generally don't see a lot of play down and through the put wall unless it's with aggressive internals. If we look at the current shorter term cycling, we have the primary value at minus 6,800. We look for about minus 8,000 to be overextended down. So we also have a lot of tension starting to build up within the cycles for a relief blow, if you will. Not to say that this is going to be the start of a corrective action up and out of channel and higher, but it could offer a little bit of relief up here into the 4,300, 4309, and even up into 4350 at the short-term 61.8 and the volatility trigger. So in terms of today, I think so long as we hold ONL, we do have option into maybe about a 1 to 2% bounce over the course of the next few days. We do have a very data-heavy week with Microsoft and Google reporting Tuesday after close, Meta Wednesday after close, and Amazon Thursday after close. So we need to add all of those events in with the also occurring exogenous events that are affecting the market, both rate-wise and geopolitically. So just a reminder, while we are under vol trigger, we do expect for pressure to be downward into support points. Supports in a bear market always offer very hard bounces based on the structure and the shorting volatility. And so off of support points, we would look for bounces, and then we would fade those bounces when the internals and crossovers tell us so. So this is where we're at today in terms of the S&P. Just a real quick check off on the Nasdaq here. I wanted to highlight the risk box here. Let me just close these. I wanted to highlight the risk box here on the Nasdaq real quick. I won't spend too much time on it, but in essence, like you see again, May, we had this huge blow. AI run. We don't back test it. We run from 13,275 all the way up into these highs up in 16,000s, and we've left a lot of structural risk under here. And this structural risk is open so long as price cannot recover 14,747 to, let's just call it 14,820. If price remains below these two retracements, then this entire range is open. It's about 9 or 10% down from current. About 9% down from current. And so this is what we're going to watch. This is going to be the pivot today for the Nasdaq and for the coming days. Can we make it back over this box? And if we make it over this box, again, just like we talked in the ES, it's going to give us a little bit of relief bounce. There's still a lot of supply up here, but it's going to at least let us get stuck in supply and allow for both sides to have action back and forth to try to break range outside of this generalized area. And while we don't, and if we don't, again, it does open that lower term risk. So just a lot of things to be considerate of. Less is more, I think, this week and then the coming weeks. We have to be cognizant of what the bonds are doing. Powell speaks also this week. We've got earnings. And so we really do need to be careful with capital. We need to protect it and only deploy it when we see situations that are beneficial, both in terms of risk and reward, and also within trades that limit potential overnight risk as well. Intraday scalping, for example, may be a worthwhile trade concept here within the next few days, just to avoid all of the earnings and geopolitical events. So I hope everybody has a good day. See you in the chat room here in a little bit. And just as a reminder, we will be over transitioning to Moon Room this week and fully over next week. Hope everybody has a great day.